The 2020 U.S. presidential election caps a year that has demonstrated just how divided the United States has become. The left-leaning Democrats and right-wing Republicans found few areas of cooperation in the handling of the COVID-19 pandemic and the numerous protests against police brutality that have occurred. With the election just days away, there is a very real fear that one side or the other may contest the result, and investors are not taking any chances.
Market has started to price in some volatility. You look at the VIX index, for instance, not so much a spot VIX index, but the futures, what the market expects the VIX index to be about a month from now. It's been pricing up a bit. So there is a bit of that expectation of some volatility.
The last time an election was contested in the U.S. was back in 2000, in the now infamous Florida recount. The issue went all the way to the Supreme Court and was eventually settled when the former Vice President Al Gore decided to concede rather than draw out the dispute. With a huge number of people opting for mail-in ballots and voting early this time around, experts say the possibility of more disputes is high.
If we had multiple states that were contested, and if one or more of those went to the Supreme Court, given what's going on right now with the Supreme Court, there's just a lot of uncertainty. So in sum, what that means for businesses, a lot of uncertainty on ultimately how it would come down and what would happen along the way. I think both sides, if they feel like they are getting that they're losing a contested election that they fundamentally believe they would have won, we're going to see demonstrations and protests out in the street. And the biggest concern from a security perspective is actually the rise of the white supremacist extremist groups.
During the campaign, President Trump has been repeatedly criticized for not condemning white supremacist groups who have expressed support for him. Earlier this month, 5 men were charged in connection with the alleged plot to kidnap the Democratic Michigan Governor Gretchen Whitmer. Control Risk says many of their clients based in the U.S. have conducted risk assessments on the impact these extremist groups could have post-election.
The challenge for business then is just understanding really what does that potentially look like for your business, for your sector, for your operational footprint, being able to track the warning signals and the potential escalation points and being ready for those. Do you have those plans in place, and are you sure you know where your assets are and what you can do to protect them in case something happens?
Others are more optimistic and are heartened by the recent polling data coming out of the U.S.
However, I must say there is one annoying potential or scenario, that is, it will take forever in the US to kind of look at all the postal votes, right? And so this might create for some days some additional uncertainty.
This means that even if the election is not contested, there may be no winner declared until next year. And that means investors must brace for a volatile 2 months ahead.
Focus still on your long-term investment goals, on your strategic composition of the portfolio, and make your portfolio as robust as possible for these times. Because at the same time, if you fear, for instance, an increase in volatility by, like if markets drop, you cannot really time that. So if you leave markets too early, it's quite difficult to enter markets again. So you could also put it that way. The biggest risk is not to be invested. But there are smarter ways to be invested and less smarter ways. For instance, look at risk minimizing approaches, systematic approaches, or add some flavor to the portfolio like long-term investment trends that are not so risky or dependent on the outcome of the election.
The other downside about not having a clear winner is that the much-needed stimulus bill could remain in limbo, and that would hurt the U.S. economy and its recovery.
It's unfortunate because we have seen the U.S. economy recovering not sharply, but quite robustly. You've seen institutions like the IMF, for instance, revising up the growth forecast for U.S. It's still bad, but not as bad as before. But the reality is that a lot of people are still out of jobs in America. The jobless rate, the last one that we had, has come down from double digit to about 8.8%, but it's still high, very, very high by historical standards. So we have a lot of room to go when it comes to any kind of normalization of the economy.